Here. Hope everyone's doing outstanding. Tuesday, February 25th, 8:59. Talk quick about the market. Some names I'm looking at go from there. Futures are kind of flat this morning. They were red earlier in the pre-market at about 6 a.m. Reverse course, bounced. S&P's in the greens. Nasdaq's kind of slightly in the red. So it's going to be an interesting session. Yesterday was a gap higher. So this time yesterday looked like, hey, we're going to just shake off what happened on Friday. Market's going to rebound. And then the bell rang and the market just sold off right at the open, hit lows at 10 o'clock, 10:30, tried to bounce, hit lows again at 11, and then rallied a little bit up to that 600 handle. So pretty much traded flat for most of the rest of the day until the late afternoon big sell-off into the close. S&P is now down 3 sessions in a row. Feels like more, right? It almost feels like a bloodbath because you're used to the market at least not having consecutive down days, and if they are, there'll be some nice bounces like we had previous sell-offs in January and earlier February. And also, if you take a look, the overall year to date, you have the S&P is still in the green, so is the Dow, but the Nasdaq just crept into negative territory for the year. Now, small caps are down over 2%. And I always try and keep things with a grain of salt, or at least a glass half full kind of scenario. But I think there's still some positive, right? So if you take a look at yesterday, first, the VIX was only up like 4%, I believe it was. Yeah, 4.2%, not over the highs that we saw earlier at the start of February, nor what we saw in January, the 2 times we broke into the 20s. US dollar and the yields continued to decline. I mean, the yields were soaring. Well, not soaring. TLT was soaring yesterday, but you take a look at yields, they're back to December levels. I think that and the US dollar back to December levels as well. I think that all bodes well. And then the amount of stocks trading over their 50-day moving average on the S&P is still over 50%. So those are some things to help put the negativity in context. And then also I've been posting that chart. Historically, the back half of February is not a good period of time for markets. So you put that all together, and maybe there's a scenario for rally after February ends. We're at the end of the month in 3 more days. So not counting today. So that's the overall market on the SPY. And I always talk about trying to have supports that, I don't put my bear suit on, but the areas that where if we break those spots, I'll look to get put hedges and not be aggressive on the call side. So the SPY, that 600 handle I was talking about, I've been talking about it since November. It's been a key support resistance area. We tried to break that Friday, and we did. We closed slightly under it, but not too far below. And then yesterday, once that broke, I went and got put hedges. Now you start looking 590.49. That's the levels, the lows we hit at the start of February. That'd be a big spot that I think if we can't hold that, if there is some further weakness in the next couple of days, that would be a spot I'd be looking to get more put hedges. And not saying, again, not putting my bear suit on, but certainly, you got to be open to both sides. All right, so that's the overall market. So then just individual names. So when the market was breaking that 600 handle early in the morning, I went and got those JPM puts. I was talking about on the rant last week that there's sectors and areas that haven't really succumbed to a lot of pressure. And you look, and there's so many charts. When I was doing the earnings implied moves over the weekend, there's so many names that have sold off kind of like under the covers, right? You don't realize how big the moves have been until you start pulling up some of the charts if you haven't looked at them. Some of the industrial, some of the infrastructure names, the Caterpillars, United Rentals, my favorite top 5 stock for last year, Sterling Infrastructure. Those names, I'll show the charts in a minute, but those are insane moves. And then you have some other sectors, almost you wouldn't even know it. And only 4 sessions ago, JP Morgan was hitting all-time highs, and then it started to pull. So, similarly, you have Meta doing the same thing. When Meta ran 20 days, now I think it's down 6 days in a row. But I'm looking for areas where I think there might be the most bang for the buck if the market continues to sell off, where names that probably were holding their ground will also start to succumb to pressure. So financial is kind of the area I think might offer the best opportunity for put hedges. So I got those JPM puts. Within about 20 minutes, they were close to a double. The plan was to hold them as a hedge, not to close them out. So I held on to them. And then sure enough, a bounce up to 261, and it traded there for the rest of the day. I'll continue to hold those JPMs as put hedges. And then Goldman Sachs and Citi might be other names I'll look if we do have a similar session to yesterday where we have some kind of pull or some market weakness. And then look at JPM, the 50-day moving average 255. So if that breaks, I think there'll just be another 2, 3, 4% move. So that's JP Morgan. Then on the flip side, I put on the watch list yesterday as well. Sweetgreen reports earnings. I think it's after the close tomorrow. Take a look. The stock's been cut in half since December. I think it offers a nice opportunity, at least for a bounce play and possible premium build into earnings. So I grabbed the calls. It actually, I was looking to get calls at the open, and it dipped from like 22.60 all the way down to 21. I think it 21.45, and then started to bounce. Then I went and got the calls, and it rallied up to 23 and changed, and fell into the afternoon with the rest of the market closed 22.61. The plan is to either lock most or all in before earnings tomorrow. I would love to be able to lock some in for 100% and then ride the rest into earnings because I like the story. I think it's kind of it's oversold territory. Also, you have Kava reports after the close today, so there might be a sympathy move on Sweetgreen, similar kind of companies. So not. I think if you take a look what happened with Kava last time, the stock was on a tear into its earnings. Actually had a great report and then sold off. Probably has another solid report, and I think that should bode well for Sweetgreen. But that's kind of playing there. But more than likely, I'll probably be out of the position before earnings tomorrow. But was looking for a bounce play, and that came up on radar. And now, in regards to bounce play, I put these on the watch list this morning as well. So Caterpillar, which was a great trade back at the start of the year, that's taken on a chin. I mean, what hit 410 mid-January, and it's down here under 340. Some of that you have to think the big infrastructure, the $2.5 trillion infrastructure bill a couple of years ago, that these names were finally feeling the tailwinds, and now you have the new administration coming, halting probably payments for some plans and things like that. So I think there's a lot of uncertainty. So that's some of the reasons I think you see some of these names just getting destroyed. But I think at some point you have to look at Caterpillar back in September. It hit a little under 330 and bounced. And it also has, if you look over the last couple of months, it has, once Caterpillar finds a bottom, it's not like it's a 1 or 2 day bounce. It goes on a nice run. So did it back in January from 350 to 410. Did it back in September from 330 up to 390. So don't be surprised if I add some puts if the market finds some footing, right? I'm not going to sit here and try and catch a falling knife. It's down. I mean, it was up. I was doing the math last time when I was in the calls. It was 1, 2. It was up like 10 of the past 11 sessions. And now you look at the red days. It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's like down to 10 of the past 12 days. So doesn't mean it can't be down 11 in the next 13 or 12 in the next 14. But once it does look like it's bottoming, I might get calls. And that's similar to United Rentals. Another name I've continued to look for opportunities to play calls on over the last year or so. It sold off more recently, so it was selling off already, and then it just announced it terminated its agreement to buy H&E Equipment Services. I mean, it did rally a little bit on the news, but I think it's somewhat oversold here. It's below. How do you have to go back? It's multi-month lows here on URI. So don't be surprised if I had some spec calls on that one. And here's Sterling. I'll post it. I don't know why I don't have this in the chart room, but this is one of my top 5 stocks for 2024. I think it was up 100 and some percent. It's still up year over year, but it was a $200 stock back in the middle of January. It's been cut in half. All right. It's just remarkable. And I don't even think it's on earnings. I have to go look. I think it's just more on speculation that if you take a look at the future, it might not be as high growth as they're accustomed to. All right, so now just individual names, and TDOC, Redfin report earnings this week. TDOC after the close tomorrow. You had Hims and Hers report, a great quarter yesterday, but I was saying on the rant yesterday afternoon, it's going to be a monster because their compounded business is just huge, but there's still uncertainty there. So because of that uncertainty, you see the stock selling off. They also have a telehealth plan as well, so it's not just 39.70. So it's not just selling the compounded GLP-1. So I was hoping there was going to be a bounce here on TDOC, but also had Zoom after the close yesterday. A little disappointing. Still like TDOC. We'll see. They're going to have to post a great report on Wednesday, and then I think it can embark back up over 115 and then starts heading into the 20s. TripAdvisor almost flat as a pancake yesterday. Hopefully that bodes well. We'll see here today. Travelzoo reported earnings this morning, and Travelzoo is very small. Nobody really covers it. They actually missed on EPS and revenues, but I don't even think that was the big deal because that's last year. So now, they talked about substantial increases in revenue and profits going forward under their new membership plan. I was going to put the chart on Travelzoo here. I almost got some spec calls yesterday. Thankfully didn't. It's gapping lower here, but it might be a shake and bake here. It might be reverse off the open. So don't be surprised if I had some Travelzoo at the open. But look at TripAdvisor under its 50 and 200-day moving average. We'd like to see it hold ground and hopefully work its way back up over its 50. Once it does, maybe I'll look for more position on TripAdvisor. Redfin reports Thursday after the close. Actually was in the green yesterday. Maybe that's the floor here. Again, it's like yields continue to fall. You have to think that bodes well for names in the real estate sector. And then last but not least, iRobot, just a death spiral the last 4 sessions. It couldn't hold its 50 and 200-day moving average yesterday, and that was the bigger move, down 12%. If you look, it's only at early February lows. So it holds 750. It's a name I continue to like for more upside in the coming weeks and months. So I'll continue to watch that one. And that's it, folks. Let's have a great day. Hopefully markets can find some footing and we can go from there. I'll be back. Rock and roll.